I'm your host, TJ, here to break down the charts, decode on-chain metrics, and give you insights that help you trade smarter. If you haven't already, hit subscribe and ring the bell, because missing this Pi update could cost you. 1. Pi 6.5% surge. Reading between the lines, on May 1, 2025, data from CoinGecko showed Pi trading at 61 cents, up 6.5% in 24 hours and plus 1.4% over 30 days. That gain outpaced Bitcoin's 3%, Ethereum's 2%, and even Solana's modest UPTICK. After consecutive down days, Pi's sudden pop has reignited excitement among the 60 million global pioneers. Why now? Two factors converged. Supply stabilization. Large April unlocks have slowed, easing selling pressure. Technical bounce. Momentum indicators, MACD and RSI, are flashing green, tempting traders to buy the dip. 2. Community optimism. Time for a pump. Sentiment on X, formerly Twitter, has flipped bullish. A prominent user called 50 cents 0.70 the good accumulation zone and set a cheeky $5 short-term target, over 700% upside from current levels. Meanwhile, commentator Moon Jeff claimed, someone is buying hard, pointing to potential institutional or whale accumulation. Even Pi News, a dedicated ecosystem channel, chimed in, Pi can go beyond your imagination anytime. This echoes last year's alpaca rally, a 2,000% surge in a week, reminding pioneers that in crypto, momentum can snowball spectacularly. 3. Token unlocks. From pressure to relief, behind April's slump lay substantial token unlocks. On April 30, over 11 million Pi flooded circulation, giving early adopters a chance to sell. But on-chain trackers show unlock volumes peaking early May 1 to 710-11 M tokens per day. May 8 onward, dropping below 6 M per day. Late May, fewer than 3 M per day as unlocks taper, supply pressure eases. If demand holds, or even edges higher, this supply contraction could be the pivot point for a sustained rally. 4. Supply metrics and locked rewards. Pi's tokenomics differ from most chains. Of 100 billion max supply, only 7 billion circulate today. 70% remains locked as mining rewards, and tied to KYC and engagement milestones. Those locks serve two purposes. 1. Long-term alignment, incentivize daily participation over short-term flipping. 2. Network integrity, ensure users are verified before unlocking rewards. While gradual unlocking fuels periodic volatility, it also underpins Pi's governance model, favoring pioneers who commit to building the network. 5. Technical indicators. A bullish reprise. Several on-chart signals suggest Pi's downtrend may be losing steam. MACD crossover. The 12-day EMA just crossed above the 26-day EMA, a classic early signal of bullish momentum. RSI near oversold, sitting around 42. RSI is climbing out of oversold territory, implying sellers are fatigued. Narrowing Bollinger Bands. Volatility has compressed. When bands squeeze, price often explodes in one direction. Here, the bias leans up given RSI and MACD. Volume uptick. Trading volume jumped 6.9% to $139 million, confirming that fresh hands are entering the market. Watch for a decisive break above the upper Bollinger Band near 70 cents. If volume surges there, Pi's next stop could be 96 cents, then $1.20. 6. Roadmap to Open Mainnet. What's next? Beyond price action, the Open Mainnet transition looms large. The Pi core team has been tight-lipped on exact launch dates, but signs of technical readiness are everywhere. Pi browser dApps are undergoing final audits. KYC systems are scaling to handle millions more. Exchange integrations are in talks behind closed doors. Major listings could unlock deep liquidity. At Consensus 2025 this month, founder Dr. Nicholas Kokalis may drop teasers or full announcements, triggering fresh rallies. Keep eyes on that event. A major reveal there could be Pi's own halving moment. Pi's modest 6.5% pop is more than just a dead cat bounce. With token unlocks tapering, strong technical signals, and open mainnet on the horizon, momentum is quietly building. Yet, risks remain. Unlock schedule still injects supply. Real utility must catch up with hype. Exchange listings are not guaranteed. Key levels to watch: support, 61 cents, break below, and bears retake control. Resistance, 70 cents to 73 cents, break above with volume, and bulls aim for 96 cents. Until then, maintain cautious optimism. If Pi clears these hurdles, we could be witnessing the start of the next big Pi network chapter. If you're ready to trade on these signals and stay ahead of Pi's open mainnet journey, smash that like button, subscribe to TJ Crypto World, and ring the bell for real-time updates. Thanks for watching, pioneers. I appreciate every one of you holding the torch for Pi's future. Until next time, stay vigilant, stay curious, and keep stacking those gains.